Hello, guys. I hope you're all doing great today. This is going to be the first official episode of Auto Claims Guru. And if you are a property owner, if you own any kind of property such as a house or a piece of land, or if you do enjoy the occasional interstate traveling, if you do like going to our neighboring states, Nevada, going spending some time in Vegas, or going to Arizona, or visiting family or friends there, or just having a nice trip, and you do this quite often, this episode is going to be exceptionally important for you. It's going to have some important information, things that you may have known or even thought about before. This episode, we're going to talk specifically about financial responsibility and state mandated liability limits. What does that mean? What do the numbers mean? And what you need to do or learn about them, so when you're in a position to purchase liability insurance, you do understand how much limit you actually need to have on your policy in these cases. So let's jump right into it. First, let me explain the state mandated limits. Each state is different, and there is specific limits that the states would put for both property damage and bodily injury liability. What that means, if you get in an accident and you hit a property, or someone is injured in that accident from the other party that you hit, for example, each state will have a minimum standard of minimum that you have to have on your policy. In California, for example, the minimum is going to be, you're going to find three numbers that's going to say 15 for bodily injury per person, 30,000 in total, and 5,000 for property damage. And what that means is, if hypothetically, let's say you rear end someone, and this vehicle has only one person there, just the driver, then you would be responsible for up to $15,000. That's the state mandated limit, up to $15,000 in bodily injury to that person, and up to $5,000 to fixing or replacing that person's vehicle. That's the absolute minimum you can have. Let's say there is the same scenario, but now there are three people in that vehicle, a driver and two other passengers. So each person in that vehicle can get a maximum of $15,000 for bodily injury, and it cannot exceed $30,000 in total for all the people in that vehicle for bodily injury, and the property damage is still $5,000. That does not change regardless of the amount of people in there. So this is the absolute minimum in California. But let's say you are a person who owns a piece of land, or you're a person that likes to travel to other states. Let's start with the land part. If you own a piece of land, just because you have the minimum, let's say your insurance liability, you only purchase the minimum mandated, whatever the state mandates, the absolute minimum, that's what you purchased with your insurance, because that keeps your premium low. That's absolutely fine. But now, let's say you purchase a house. Now that minimum is not good enough. Just because the minimum that the states mandates is 15,000 for bodily injury per person, and 30,000 in total, and 5,000 for property damage, that doesn't necessarily mean that this is going to be the cost every single time in an accident. Unfortunately, bodily injuries can be exponentially expensive. Depends on the severity of the injury, and just few hours in the ER can run that 15,000 easily. So just because these are the limits, it doesn't mean that's the cost. But let's say your insurance, that's the liability that you purchase, just the absolute minimum mandated by the state. You get in an accident, the bodily injury exceeds the $15,000, or The property damage, the other vehicle, you had a more expensive vehicle where the car is totaled, and now the cost for this car is going to be like 10 grand, 15 grand, for example. But your limits are only 5,000. That's the maximum your insurance is going to pay. Does this mean you're forgiven the rest? Typically not. The other party can still come after you personally for the rest of the money, pretty much. Now, if you own a property, if you own a piece of land, or if you own a house, now you are going to be liable. They can take you to court. They can go to court and take you all the way, and the judge can literally force you to sell this house or sell this piece of land so you settle this debt that you have to the other person. So that's why typically when you buy a house, your insurance, even if they're supposed to tell you this right offhand, you're supposed to have a liability limit that's at least equivalent to the market value of your house. So that way, if you get involved in an accident, if something does happen, no one can go after your property. You actually have enough insurance coverage that no one can go after your property. You're safe that way. Yes, it does increase your premium a little bit, but it protects you on the long run, and it protects your livelihood. Nobody can go after your property. So that's something that definitely to think about. Let's say, for example, just to give you a little bit of an example, let's say your house is worth $200,000, just a hypothetical. Then your liability limits should be at least, in my opinion, it should be at least 100,000 for bodily injury per person, 200,000 in total, and then looking at probably 300,000 in property damage limit. That's a good, healthy limit to have in your policy if you do own a piece of land or a property. Now, if you own more expensive property, of course, this is going to go a little bit higher. You should go a little bit higher with your policy limit. Needless to say, there are other options such as umbrella coverage and so on that can give you a little bit better coverage as well alongside your regular insurance. But for the sake of the argument, just keep in mind in the back of your head, if you do own a property, you need a little bit higher limits. Now, if you don't own a property and you're renting or whatnot, again, just in my personal opinion, I think you still should have a little bit higher liability limits than the minimum statement dated in California, just because of the cost of everything that goes into repairing vehicles or bodily injury or whatnot. It's usually not going to be the minimum. It's usually higher. Your average duration to repair a vehicle, for example, is roughly about 11 days. 11 days with all the labor and all the parts and everything. You are well into the 4,000 or 5,000 just for a simple fix. If you had, for example, a truck, the rear bumper of a truck, a metal bumper on a truck can run roughly about $2,000 just to fix that part. So it's always to have a healthy policy limits, liability limits. Personally, I think 100, 200, and 300 for property damage. I personally think this is a good, healthy limits for everyone. But this is your decision to make. Just giving you some ideas. Now, if you are a person that do enjoy traveling and you like to go to Vegas every few months or once a year or something, or you like to drive to Arizona and take your own vehicle to do so, you have to keep in mind that while the California mandated financial responsibility limits is only 15, 30, and 5,000 for property damage, in state like Arizona or like Nevada, it's much higher than that. You're like, for example, in Nevada, the liability limits are $25,000 for bodily injury per person, $50,000 in total, and $20,000 for property damage. $1,000. So now you're talking about much higher liability limits than what California mandates. So if you have on your policy, if you have the absolute minimum liability required in California and you go drive to Nevada, for example, you are officially in violation of their state limits, and your insurance is not valid there any longer. It doesn't cover the limits that they require. So if you're that kind of person that likes to travel, keep that in the back of your head as well, and make sure you have on your liability limits, you have sufficient limits, so when you drive to other states, you're not in violation, you're not in trouble. If God forbid you get in an accident, you would actually be covered. That's pretty much it for this idea. Just try to understand what your limits are. I challenge you to go look at them, and if you don't already know what you have, just keep that in mind and look at it and see if you do need to increase your limits. The premium, if you do increase your limits, the premium shouldn't go up that much higher. And honestly, the difference that you would pay in the premium would just give you the ease of mind that you need while you're on the road, in case something like that happens. All right, guys, thank you. I appreciate it. I wish you a wonderful weekend, and I'll see you soon in the next episode.